Good day traders, welcome to this week's live Q&A session as well as my market geometry analysis that I do on a weekly basis on Wednesdays with me, Richard K from Price Action and Income. Before we get started, if you do like what we are showing you here today, then please subscribe to this channel, hit the notification bell and leave any comments you might have in the comment section. And we'll be glad to respond to any questions you might have even afterwards if you watch this video and not during the live session. So as always, anything that I'm showing you today just reflect my own opinions and basically my own trading style. So it does not constitute any trading advice. And as always, we also have Nathan from Price Action Income, my right-hand man, manning the chat box there. So generally we go on for about 30 minutes, and if you have any questions towards the end of these sessions, then please let Nathan know there in the chat and he'll relay them to me. If you've got any markets you want me to have a look at, then I'll be more than happy to do that. Generally we just look at a few markets at continuous basis, just basically feeling what you guys tend to want to see. We've got a lot of people that have been asking about Bitcoin during these sessions. We were looking at that today. Some traders want to know what the dollar index is doing so they can gauge what to do with the other cross-currency pairs that trades versus the US dollar. So we're looking at the dollar index today. We're also going to be looking at Bitcoin. And then also have a new potential setup that we'll see how it goes, obviously, on the Euro AUD, another Forex pair. All right, guys, so let me quickly delve into the analysis. And then if there's any time left, you guys can just basically ask me any questions you have. All right, so first up, dollar index. We started covering the dollar index during these sessions around about, I think it was mid-August. And we first had a shift pitchfork anchored from the low at the start of this year to this higher high on the 31st of March to this higher low on the 25th of May. If you're new to this channel, I still believe that we are only correcting higher and not actually making a new trend to the upside. I think towards the end of the year, maybe even sooner than that, might get a decline. I think it will not go to new lows, potentially another high towards the end of this year. Well, it is actually almost the end of the year, let's say around about December somewhere, and then another decline to complete a much larger ABC. Before we get a substantial move to the upside. That's just my thinking, obviously. We're more focused on what's happening this year though, although I do obviously want to have a great idea or good idea of what's happening in the bigger picture. So we're constantly looking at a daily time frame. Price has now overshot this shift pitchfork. Now we are currently approaching, or the dollar index is currently approaching, the center median line of that long multi-year time frame pitchfork that I drew, the blue one over here, and potentially being drawn towards those median lines. If you've been trading with pitchforks for quite a long time, then you'll know that price tends to gravitate towards the center median line, and obviously your upper and your lower. And we're still in the bottom half of this pitchfork. Price has not yet reached this low median line, so I'm still thinking that we're either dealing with a WXY or a potential ABC, whatever the case might be, where the C wave could be an extension. So I'm still viewing this as corrective. What is also quite interesting is that we have this sort of expanding sort of diagonal that really looks like is present on the chart since the high on the 21st of July to this one on the 30th of July to that high again, failed to break this low, and now it's basically moved up. If we look at a smaller time frame like the 4-hour, then even here we might even have a small little ending diagonal coming to an end. This basically falls with my my bias that I think we're going to get a decline soon. We might even shoot into this upper zone that I marked over here before we actually do get a decline. And then potentially we're going to see bounces in gold, obviously euro, US dollar, Japanese yen will probably go down. All the basket trades that is followed by the dollar index. The dollar index is just there to obviously gauge the strength of the dollar. And I'm sure that a lot of eyes would be on today's CPI, Consumer Price Index, inflation numbers as well. So that might affect the dollar. I don't think we're done going up yet, but I think we are very close going up before we get in my opinion, just a corrective move before another final move to the upside before we go down. All right, so that's my view on the dollar index. Guys, during one of the previous sessions, we looked at the US dollar Swiss franc as a potential trade idea price, and I gave you guys the zone in one of those videos. Price actually came into the zone and has moved lower again. The US dollar Swiss franc wasn't actually listed as one of the ideas I want to cover today, but I just want to show you what I think is happening here, because obviously if this does play out, then you'll probably have a decent idea of how to potentially trade the US dollar Swiss franc if you do trade currencies. So if the dollar index potentially still going to move higher, then I think we have a chance that the US dollar Swiss franc might re-enter into this zone that lies between 0.9350, 0.9390 before we get a substantial move to the downside. Alternatively, also just very well aware of what other traders are watching here is the potential of a head and shoulders pattern. So this could have definitely been a high already. Price came down and now potentially making or completing the right hand shoulder. So we had a left hand shoulder here. It could come as high as that area if it doesn't fail, or it fails to enter this sell zone that I gave up here, or a resistance zone as we can also call it. Then and it does move lower, then if price breaks this neckline, which would actually be here then. Well, let's put the necklines, actually, sorry, I'm being confused here. Right here we have the center median line of a pitchfork that's been sloping to the upside. But quite often you would not really know that you're dealing with a potential head and shoulders pattern until your neckline gets broken to the downside. So if this is a left shoulder and that was a head, and we're creating a left shoulder that fails to go to the upper zone here, and it breaks the center median line, which is currently lying around about 0.9240, 0.9250-ish, then I think that would confirm that we're going to get a strong downward move to the downside. But quite often you'll have traders that will wait for this first to confirm a head and shoulders pattern, wait for a pullback, what we call a kiss goodbye to the neckline, and then short it. So if price doesn't move into this zone again, and that happens, then I think we're going to get a decent downward move to the downside on US dollar Swiss franc. All right, I just wanted to show how well that zone worked, and the zone that I showed you beforehand during one of these sessions. This brings me to Bitcoin. Guys, on the 22nd of September's live YouTube session, I talked about our newly, well, a cycle report that we're basically going to release here, price action income, and how I drew cycles showing that we might have potential highs, potential lows, potential highs, and potential lows, basically giving you peaks and troughs in cycles before price got there that could have forewarned you that we potentially might get, you know, a change in direction. Now we've done this on the 22nd of September. These cycles already work really well, especially this one over here. Price came down very hard within that cycle. Is basically a time period I identified beforehand, before price reached this. I also showed you the cycles that they were performed before price came into the high, so I didn't do this after the fact. And then please go watch, if you're interested in this sort of cycle work, at the 22nd of September's live session. I think it's towards the last quarter of that video. You'll see that I show those cycles there. And then we were watching at a time period around the end of September. It was between the 28th and the 30th September where I expected another move to the upside, and it is exactly what we got. So very powerful stuff. I really love performing cycle analysis on Bitcoin, especially on a 4-hour chart. Now I'm actually foreseeing another potential, I wouldn't say top, but a reversal point next week. Unfortunately, I can't really give that out to you guys. This will be only for the guys that's gonna, decide to subscribe to our newsletter, which we're gonna call the cycle timing report. And but all I can say is that we do have a next cycle coming in next week that could potentially turn Bitcoin lower again. All right, so guys, just quickly on the topic of the cycles, lastly, we will be releasing the report towards the end of this week. And if you are on our mailing list and you're interested in this, then you'll definitely be notified. Alternatively, we'll be dropping some updates in the comment section of these videos as well. So if you are subscribed, then you'll know about that and know how to basically access this report. All right, so that's Bitcoin. I'm still of the opinion that we are an impulsive move to the upside and that we could potentially at least challenge the all-time highs at around what was it, the 65,000 level. How we obviously get there is a different story, and this is why I combine cycle work with market geometry. Right, and this brings me to the Euro AUD. We had a very interesting level on the Euro AUD. I'm actually with my subscribers attempting to take a long here. I'm actually buying into the Euro AUD. And just to quickly show you what I've got over here now, I combine different market geometric techniques to find areas where I want to trade from. I first want to go down to, let's say, a weekly time frame. And this is typically how I find very large swing trades. Now I've drawn what we call a modified pitchfork. You can see that price failed at this massive high here in March last year to stay above the upper median line. Price then collapsed lower. There was enough evidence for me that the angles of this pitchfork using these anchor points from 2012 to this high in 2015 to this low in 2017. So multi-year modified pitchfork, which is the same as a channel if you use the same anchor points. So price has been respecting this angle really well. It has basically at the beginning of this year reached the lower median line again. It bounced up and down, moved to the upside, and has now recently pulled back right back to that lower median line here. And guys, especially when you're dealing with pitchforks on very long-term time scales, then quite often these lines are very strong, act as very strong support and resistance levels, if I can say that. Let's go to the daily. Let's zoom right into that area over there. As you'll see, we had what we call a little underthrow below this lower median line of a long-term pitchfork. Price moved higher. I also had a channel that I drew from that high to this high and to this low over here, and price has also now reached the center line of that channel. So we have a center channel line, we have this upward sloping long-term lower median line of that modified shift pitchfork, and if I'm correct, then I do think that we might have already seen the end of an ABC correction, i.e. against this upward move to the upside, that has now reached 3 different levels or lines of market geometry. And that's typically how I identify the zones. This zone was between 1.5700 to 1.5620, and I identified that zone before price reached there, which is very important. This is not done after the fact. So we basically came down and we are now seeing a bounce to the upside. So very interesting, and I've actually done this yesterday. I want to just quickly show you something on the cycle side of things. This is the Euro AUD. Basically, I drew cycles identifying the dominant cycles. There are 3 of them. 1, 2, 3, and I won't go into too much detail of how these things are calculated. It might confuse you, but I'm working from this low prior to this move to the upside as my starting point, and I just want to know which cycles from here to the current price where we are today on the 13th of October, which cycles have been governing this market. And you can very clearly see that these cycles had caught these little peaks, bottoms, peaks, very close to bottom, this major peak there, and then price continued lower. Now we in this sort of cycle trough, as we call it. So basically, together with the market geometry at 3 different points using 3 different time frames, like a weekly, a daily, and I'll even drill down to 4-hour. Got a lot of different market geometry lines sloping at different angles, all coming together at a certain area, and then obviously a cycle that potentially showing you that we could expect an upward move from around about this low where we are at the moment. Sometimes these cycles arrive early and sometimes they arrive a little bit late, which is perfectly fine in my opinion. Cycles basically for me just there to forewarn you of potential turns in the market, and rather than just trading a cycle, you need something like market geometry, which I showed you here in quite a lot of detail of where to find those potential turning points if the cycle does turn out to be correct. And quite often, if you see multiple market geometry lines align, you do get a nice decent move out of it, and it lines up with what cycles are showing. You got a really good chance of a decent directional trade to the upside. In this case, I'm actually going to attempt to go for quite a large swing trade back to the upside with a very good reward versus risk ratio. And we're 17 minutes in, guys. That's all I have to show you on my side. So I think we can now go to questions. If you have any questions, you want any markets that me to look at any markets that you might have, then I'll be happy to do that for you. I'm just waiting for Nathan. He is typing something for me there. Let's see if we got any questions coming in. I see Nathan is typing away though. I know we've had quite a lot of questions about the pound US dollar for some reason. I think it's one of the favorite markets that you guys want to follow and look at. I just want to show you what I got on the pound US dollar. Why is this taking so long to load now? But there we go. Yeah. Any case, guys, I don't think we're done going up on the pound US dollar. I'm still seeing this as a correction. I'll be dead honest with you that it could be a multiple different amounts of corrections. It does look like a 1, 2, 3, 4 ending diagonal 5th wave into a larger 3rd wave that started also in May or March last year. I think this was a 1, 2 impulsive 3rd, and now that we get in a 4th wave correction, I think we are very near to a potential bottom here. Just do not think that we're done going down yet. So if you're trading the pound US dollar, just be very careful. I still think that we might even see a bottom towards the end of this year if this all aligns with what the dollar index is doing. That being said, if we do make this little pop, and I do expect a little move lower that is possibly going to be corrective, then on the pound where did the pound US dollar go now? Did I delete it? Yep. Let's just open another one. Sorry about that, guys. then I won't be surprised to see some strength over the short term with another move lower to probably flush these lows before we get the fourth wave to complete, and then see another fifth wave that could potentially challenge these highs that was set earlier this year. Hassan, you want to look at gold? Let's quickly have a look at gold. Let me just save that. Hassan, if you followed what I said in the dollar index, I think we're going to see near-term strength in gold. It all depends. I'm watching closely what the dollar index is doing. I am expecting the dollar index to potentially start showing some signs of weakness. That will potentially give us another bump higher in gold. That being said, Hassan, and if you attended one of my previous videos or sessions, my opinion is still that we're not done going down. Gold has, and I know a lot of guys that are in love with gold, trading gold, made a lot of money with gold in the past, who has been incredibly frustrated this year because they got stuck in thinking that price is going to just go high. For example, here we thought we had an ABC, XABC, and they thought now we're going to new highs, just to be proven wrong, and yup, we go down again. So price action is very wishy-washy. I'm still expecting, and also again following what the dollar index is doing, that we can see near-term strength. That drop in the dollar index, probably see gold have a nice blip to the upside, down towards also end of this year, maybe first quarter of next year, before we actually see a substantial bottom and then go higher. But everyone that's trading gold at the moment is being killed by this. I won't call this volatility as much, I would just say by all of this confusion. Up, down, up, down, up, down. So definitely not a market I really want to be trading at the moment. We did try to trade the gold last week with my members, but we just didn't get the correct setup. Price did make a little blimp. It was actually this little blip to the upside and immediately reversed to the downside. So although that could have been a little bit profitable, you know, we weren't in that trade, and really, to be honest, it's just been running sideways. Then we have another question on the SPX 500, and then we ask a question from Ron also asking about the ES. So the SPX is obviously the main indice, and the ES is the E-mini, so we can just look at the E-mini. Let's quickly have a look at that. It'll be the same as SPX. I'll bring up a continuous contract. Guys, we had zones here that I identified right about here in the beginning of this year, where prices reached, and we have now moved downwards. I know that there are a lot of analysts all of a sudden climbing out of the woodwork saying that a top is in for the year. They tend to have this really bearish views, doomsday sayers. I'm not that sure. I won't be surprised if they're now going to increase, or with the Fed now seeing how bad the job numbers were, going to start delaying the raising interest rates and those sort of things, which could potentially be bullish against for the S&P 500. What is interesting, and I showed you this last week, was a shift pitchfork from this high when this decline happened, had to move to the upside, and now price has reached this low median line, and we've seen a bounce to the upside again. This could have been an actual low. I wouldn't be surprised if we go challenge these highs towards the end of the year and then see a decline. And actually this is going to be incorporated in my cycle work. I've done long-term cycle analysis on the S&P 500 as well as the Dow Jones, and that will be all revealed in that cycle timing report. So we're putting a lot of hard work in there, but all I can really say is that my projections still show that we could potentially be topping only towards the end of this month. towards the November, December sort of time period, potentially see a large move to the downside, up again towards June, July next year, and then see a move to the downside afterwards. I wouldn't be surprised if we're now going into a period of sideways movement with very large ranging sort of prices. That is my expectation. The cycles are also telling me the same thing there. And but like I said, I would not be surprised if we do make new highs before the end of the year. This, I don't know, could have been an A, B, C, X. We had an A, potential B, and another C before we would actually see the next move to the upside. But I'm still viewing this as actually corrective. For me, watching these levels at 41.42 and 40.54, if they get broken to the downside, then I would say, yep, we got a top in for this year, and that we might correct even much deeper. But as long as we stay above these levels, I'm still viewing this as corrective. Then we have a question from Mol Eaton on the pound Swiss franc. He wants me to have a look at that for sure. Guys, that will be my last one that we look at today. Just to keep everything in time for us. This is actually one that I marked up a while back. You can see I have pretty much everything marked up in all the markets that you can basically think of. Let me just quickly see if I got that other chart open before I dive into the pound Swiss. Here's my view on the pound Swiss. As you see, I didn't draw this now in front of you. I'm actually thinking that we're dealing with a very funny looking triangle formation where we had a potential C wave complete and that we're now waiting for a D wave move to the downside, i.e. I still think the pound Swiss can go lower. That's my short-term view. Short term could be anywhere from a couple of weeks to potentially a couple of months. I think that we most likely ended a C wave and that we're going down in a D wave. You won't really be sure that you're dealing with a potential triangle until you anticipate that a D wave might happen. And if you then, let's say for example, identify a zone where you think a D wave might end and you then get a bounce to the upside, at that stage the likelihood of a triangle taking shape becomes way more probable, if I can say that. So in my opinion, this is actually a bearish triangle that might still take quite a long time to complete, and then most likely have a bearish effect out of it as well. But again, and you probably see this from just watching the price action, Mole, is that if you got involved here, you would most likely have been, I don't know, killed in this up and down, up and down, up and down movement that's been lasting for most of this year. Something I've been watching the other day is that we potentially had an A with an A, B, C, D, E, i.e. expanded triangle. Something like that. That either completed or still needs to complete at another high. So let me just mark that out for you. This is on my radar actually at the moment. So we either had an E wave here or this would be a D, sorry. We either had an E wave there or it wants to make another E wave. And then this entire thing, because if we're going to move down, it needs to happen in a zigzag. And it's just a very, very complex one. Potentially have an A, B, C to complete this D wave of the triangle. Whoops, why do I have that one now? Let me just get the right labeling tool out here. I-E, A. Either here or there already with another C wave lower to complete the D wave. Then an E wave up. and then a large downwards move that could be quite massive in my opinion. Let me just label that properly. Let's go primary and let's change the color to purple. I'm actually going to save that. This is a market I want to be looking at, but or you can also see that price has been respecting this channel pretty well. So we might, like I said, be done with an E wave there. So this is a B wave that actually, in my opinion, traced out a very complex expanding triangle that's either ended or still needs to end and then move lower. But my expectation over the next few weeks or months is still down. Downward move. All right, guys, and that's basically all we have time for today. I really thank you for all the questions you have posted. I really do hope that you like this sort of analysis. Again, if you've not done so before, hit that notification bell, hit the subscribe button, and especially if you're interested in the cycle newsletter that we're going to be releasing soon, then just, you know, by hitting the subscribe button, you'll get notified next time on when we're going to release that. And if you're on our mailing list, then you'll get a notification in any case, and then you can go check that out. But we're pretty much done with that. We're just uploading it to our website, and we'll be launching that towards the end of this week. Right, guys, that concludes today's session. Thank you very much for watching. I hope you all have a fantastic rest of your week and weekend, and then I'll be back next week again with another session. If you're watching this after the actual live session, you got any questions, then please feel free to drop some questions in the comments section below the video, or, you know, just give us your opinion of what you think of this sort of analysis. And anyway, guys, without further ado, thank you very much for listening, and have a good one. Goodbye.